Money Africa is a community-powered digital finance platform that leverages the concepts of social trust and group responsibility to provide a range of financial services to SMEs and consumers in Africa. Over the past year, online platform has disbursed about 20,000 loans totaling some $25 million with a 99% repayment rate among their clientele. Joining us to discuss the world of digital lending and outlook on the sector, we have, our next guest, of course, joining us right now. Let's get Femi Iromini, who is the CEO and co-founder of Moni. Femi, you're very welcome. Thank you so much for joining us. So I wanted to ask you about the world of digital lending. Can you key us into how that's been playing out across the continent, how big it is, especially in Africa?
Thank you very much, Rotus. So when you think about digital lending, first you have to think about what were we doing before taking things digital. Primarily, you're going to think about the traditional way where people lend to each other in groups and all that, right? But the essence of technology is such that you can actually do this at scale. You can make it more efficient, and then it can be more transparent, right? So, and when you think about that, it makes access to finance to be more accessible, right? And one of the things we're doing at Moni is being able to leverage on technology to be able to provide financing to small businesses, while still not removing the human element or the community-based model that is akin to most emerging markets.
Great stuff. SMEs account for about 90% of businesses and 60% of jobs on the continent, yet 80% approximately receive no bank financing, especially youth and women-owned firms. Why does this situation exist, and what can be done about it?
To be specific, the 80% you're talking about that's about 37 million small businesses, right? And the reality is, when you think about these businesses, often they don't have digital record, they don't have credit card, they don't have a record on credit bureau, right? So it's really difficult for most commercial banks and a lot of fintechs to be able to provide loans for them, right? So what we've been able to do at Moni is to be able to rethink how lending can be done. How can you provide sustainable financing to small businesses? First is you're thinking about the concept of community. In most emerging markets like Africa, communities are very important. You think about how people come together for wedding, for ashrebi, and all that. Now, the concept of community is what we've been able to use, such that community actually serve as a collateral for the loan, and the other parties, they are accountable to each other. And with this, we're able to bypass the orders around credit bureau and some other channel that normally would not give the small businesses access to finance. One of the major things we can do as a continent is being able to build an infrastructure that supports digital records for small businesses, such that credit bureaus are up to date. Businesses are able to get an enabling environment to be able to register, and also they can actually build up their financial record from there, basically.
All right, great stuff. So we've heard a lot from various fintechs talking about lending to SMEs. Is that really happening? Besides the besides the stats, are they really collecting, have access to these funds?
I wouldn't say the access is not there, but it's very limited, right? Very few small businesses actually have access to loan. Often, when you go to a traditional bank, the first thing they're asking is your collateral, right? And when you're engaging even fintechs, the other part is you need to have some records, you need to have your financial history and all that. But the question is, in a case where people are not digitally included, how do you solve this for them, right? So in the first place, the access is there, but it's still very limited, right? And that is why we're coming into the space, such that we're able to provide loans to businesses, not just considering their digital landmark alone, but they've been able to leverage on the power of their community, basically. And with that, in the last 12 months, we've disbursed over $25 million worth of loan. And that's over like 20,000 loan counts. What we discovered is when small businesses have access to working capital, they're able to grow their business faster.
Now, these, as far as growth in businesses being faster, these SMEs seem to have their own ways of accessing loans offline. What does tech bring to this as far as the difference that it makes?
Necessarily would not generalize they have access to it offline, right? Because first is the access is limited. So what tech has been able to do is to be able to create a medium for it to be sustainable. Tech has been able to make it easier for them to access.
All right, we seem to have had a little bit of a technical hitch there. Femi Iromini, who's the head of Moni, talking about the digital lending ecosystem and how it's making a difference for small, medium enterprises across the African continent. Because, of course, access to finance is one of the biggest metrics by which success is dependent upon. All right, so Femi, sorry, we lost you a bit there. I just wanted you to quickly conclude on your point about offline access to loans and what tech brings to the ecosystem and how it changes things.
So clearly, tech necessarily actually makes access to loans to be more scalable, right? Without going to a physical office, from your smartphone, you can actually have access to loans. The other part is being able to build up digital footprint that will be very useful for them on the long term to expand their business. So often tech is actually a major enabler to make financial services like loans more accessible.
Great stuff. Femi, really appreciate you joining us to talk about how how tech can change things for the digital ecosystem. Femi Iromini, founder of Moni, thank you so much for your time. We appreciate you joining us.